NMRC is a secondary mortgage institution, whilst the banks are primary mortgage institution. There has to be some, to remove or reduce the risk of NMRC's operations, there has to be some sort of what is called a seasoning period. In other words, the length of which the mortgage has shown its repayment capacity. Repayment capacity has been set by the Central Bank of Nigeria at 6 months minimum. So NMRC is not entitled to underwrite any mortgage except it has had a minimum seasoning of 6 months. All right? So the question then is, where do they get the funding to create the mortgage for it to have that 6 month period? NMRC has its bond funding program, which is guaranteed by the federal government of Nigeria at this point in time. So NMRC would go to the market and raise a bond for, say, 20 years. I'm just giving an example. It can go up to 20 years. The first one it did was 15 years duration, the longest corporate bond in the market today. So it can go to the market, raise a 20-year bond, yeah? And then use the proceeds of that 20-year bond to do what? Refinance the what? The CP. That way, from the day of refinancing, what happens? From the mortgage bank's perspective, they now have what? They have a liability to NMRC for 20 years, matched to an asset, which is the mortgage, also for 20 years. Does everybody understand that working? Exactly. So that's how we actually manage the system. For me, one of the joys I would like to see is when the mortgage banks begin to actually advertise in the papers to say, I can give you a mortgage for 20 years, etc. Let's say we're going live January 2018, just giving an example. What would happen is mortgage banks will begin originating mortgages from the 1st of January to the, say, 25th of that month. That pool would then be brought to MWFL for financing. And then once that is financed, it would then season for 6 months and then be refinanced by NMRC. And so the cycle goes on and on and on. We're making progress. I mean, I'm happy that Prof has mentioned the issues to do with the foreclosure law and also the fact that Lagos State would like to get the Law Reform Commission to get involved, the working committee that's been set up under the MOU. That would be great, because at the end of the day, under this whole thing that we're doing here, the people that are actually taking the risk on this is actually the banks. You know, when NMRC refinances, the asset still remains, or the asset risk still remains on the mortgage bank. In fact, if the mortgage should default during the refinancing period, that mortgage has to be substituted. In other words, you take it out and you put in a new performing mortgage. That happens on both the pre-financing, refinancing cycle. In those circumstances, think about it. If a mortgage is defaulting and the mortgage bank cannot sell that property to recover its funds, whose capital does it hit? It's the mortgage bank. That is why, Honorable Commissioner, the foreclosure law is very, very important, because if we don't resolve that problem, no matter the beauty and the whole things we're putting together, if the banks cannot recover on the loans that they give when they default, their capital will be eroded, they will go out of business, inevitably.